Hey, what's up everyone? We are live. This is Crypto News in 1 minute, and we're extending it to about 10 minutes because it's our weekly update. So I want to cover some macroeconomic and crypto news tidbits of the last few days. I've been out, so I'm back. Be back if you're here. Thanks for coming. Thanks for checking out some of this news. Okay, first off, BTC price action. It's not pretty. Bitcoin barely holding on over 20,000. It's down about 2.5% in the last 24 hours. ETH, BNB down 6 and 7% respectively, around 1,100 and 218 right now. So the pressure is definitely on, and the bears are still in full control. Looking at the overall macroeconomic scene, update this morning from the US BEA, Bureau of Economic Analysis. The GDP for the first quarter was updated from minus 1.5% growth to minus 1.6% growth. So that's a third revision. That's typical standard operating procedure for the BEA. And the next report will be the quarter two preliminary report, where the GDP growth for quarter two will be measured. A recession is where 2 consecutive quarters are negative. So if it does turn negative, we will be officially in a recession. So stay tuned, July 28th, that's a month from now, for that report. In Uzbekistan, Bitcoin mining that is done with solar powered energy will be tax-free. It's good news for Bitcoin miners. If you happen to be set up in Uzbekistan with a solar farm right now, you're good. Otherwise, it seems like a nice place to go. All right. Let's talk about a Bitcoin spot ETF here in the US. There's 2 futures ETFs, but no spot ETFs. Well, in Switzerland, they just announced the approval of another ETP, exchange traded product, European version, basically same thing. 21 shares, also the parent company of Amoon.com. 21 shares launched a Bitcoin ETP. It's the cheapest Bitcoin ETP, meaning the cost to hold Bitcoin there. The cost of the fund is the cheapest of any existing Bitcoin ETPs. It's live in Europe now. All right, bears be damned. Michael Saylor, MicroStrategy, joined the list of stubborn bulls. Just bought another chunk of Bitcoin, $10 million in Bitcoin. It's a bit more modest than some past purchases, but he just bought another $10 million in BTC. Joining Kevin O'Leary and Anthony Scaramucci as 2 big ballers that are still bullish and buying the dip. BlockFi, been in the news lately, been under some heat, under some pressure, hasn't closed withdrawals, but have been in the news a lot. They recently got fined by the Iowa state regulation body over $900,000, $943,000, and just a couple weeks later, they got their license for a money services business in Iowa. During this crypto winter, we still have lots of adoption happening. The U.S. Patent and Trademark Office is actually holding a series of webinars on the metaverse. It starts July 19th with a seminar entitled Intellectual Property Investigation of Protection in the Metaverse. So, US Gov back in the metaverse, pretty exciting times, unless you're looking at the price. Yeah, big news for crypto, Web3 adoption, etc. So those are some of the main news points. Going to scroll around and see if there's any latest updates here, but you've got that going on. Some reasons why we're looking at some bearish things overall. Tech layoffs have continued to increase. That goes over into crypto. Hobie, big South Korea crypto exchange, expected to lay off 30% of its staff to drop in revenue, but it's not just crypto. Tech industry, I recently posted here on my Twitter, has been laying off quite a few folks. In May, there were 17,000 layoffs, 19,000 in June, with Tesla being one of the leaders, and numerous other companies you can see in the graphic that I shared. So with the Federal Reserve continuing to increase interest rates, sell off its assets, quantitative tightening as it's called, essentially the signal and pressure is on for tech companies and companies that are perhaps still new or less profitable to trim their sheets and release employees, lay off employees. This trend is expected to continue until the Fed reverses course, and intends to keep going on that course as long as inflation continues rising. As you know, inflation in the US was at 8.6% in the May report, so hotter than expected, and the Fed increased interest rates 0.75%. A massive spike. They were expected to do 0.5%, so it was a bit of a shock. Some inflation figures around the world. Germany's price producer index, PPI, last month, a few weeks ago, actually shocked at 33%. Looking at some other inflation figures around the world, which is why central banks are tightening. You have obviously some of the worst in terms of increase in inflation rate, not inflation rate, but increase in inflation from first quarter 2020 to first quarter 2022. Israel's rate is 25 times higher. Greece and Italy around 20% higher. Spain and Portugal over 10 times higher. So not just the US, but around the world, we're seeing inflation rates, and central banks are currently tightening. So as inflation starts to lower, or as the central banks incite recessions and increases in unemployment, generally their trend is to then ease up, become more dovish on inflation, and let things roll again. So that's all we got for today. Stay safe out there. Stack sats, hodl, as we say. If you want to check out what we got going on, latestblog.com. With some recent articles, go to thelatestblog.com/subscribe. Subscribe to the newsletter and check it out. Have an awesome day, everyone. Bye.